A reverse mortgage is that when you have already an asset, a property, then you can start generating a certain cash flow, a small amount of cash flow from it on month basis. So that's what the name reverse mortgage is, because you get small cash flows out of a large asset.
Hi, welcome to Gen Seasoned. I'm Anuradha and I'm speaking to Babu Krishnamoorthy. He's the Chief Sherpa at Finsherpa Investment Services. He comes with over 25 years of experience in wealth management, investment banking, and retirement planning. So, hi, Babu. So wonderful to have you here.
Absolutely. My pleasure, Anuradha, being here.
Yeah.
Thank you.
Yeah, so let's jump right into it. We're talking about reverse mortgages. I'm sure a lot of people are already familiar with the concept, but I just heard about it recently. And all of us keep saying this, yeah, so what? I may have a house, or he may have a house, or she may have a house, but that doesn't mean cash, right? But in reverse mortgage, your house is literally cash, right? It gives you cash. So tell me very simply, to start, what is a reverse mortgage?
So reverse mortgage is, as the name suggests, in a typical mortgage, you put in small amounts of money to buy a property, a large asset, right? A reverse mortgage is that when you have already an asset, a property, then you can start generating a certain cash flow, a small amount of cash flow from it on month basis. So that's what the name reverse mortgage is, because you get small cash flows out of a large asset. So typically, this is meant for senior citizens, and the government has created this as a vehicle through which senior citizens who have property, let's say an apartment or a house, can use this reverse mortgage facility and through a bank start generating regular income to supplement whatever income that they already have. So if they have a pension, if they need a little bit more, I think reverse mortgage comes in as a very important tool for them to generate cash flow for themselves.
So has this been around forever and we've just not heard about it, or is this something new? Sorry, I'm very ignorant
It,
about this.
no, it's been around for about 15, 20 years, but really it's not kind of got the publicity that any of this needs for a couple of reasons. One is in India, property is a very personal thing, right? And people generally don't want to go for these kind of things, even if they are, short on cash. Senior citizens tend to hold a sentimentality towards property. So those kind of things have come in the way of really popularizing this in a big way. But we do believe in due course of time, this will take a larger role. And it's important for people to understand how it works.
Right. No, and I can imagine it taking on a larger role. And, because see, most senior citizens, many of them, let's say, they're living on their own, children are abroad, or, whatever. And in our generation, we're seeing, many people don't have chosen not to have kids as well. So, things like that. And so it makes sense, right? All the children are independent and doing very well for themselves, and they tell the parents like, listen, we don't need your property. So in any case, so it's something that it gives you financial independence, and in your lifetime, you kind of reverse mortgage and enjoy the benefits. So it's just great. It makes a lot of sense. So tell me, first of all, who is it for? Like I mentioned all these examples, but who is it for? Because you do retirement planning, you talk to so many people. What are their concerns? And let's say, who would you advise, to go in for a reverse mortgage?
Typically, reverse mortgage, from a law perspective, is eligible only for people who are above the age of 60, senior citizens. So, from that perspective, that applies for that. But more or less, what I have found in reality is that the first 5, 10 years, people have enough money to manage, right? So, most people who retire at 58 or 60 don't have much of a financial problem, even if they keep the money in the bank alone. They're quite okay up to the age of, say, 68 or 70. There's absolutely no problem. It's really after 70, 75 that they have, in some cases, I've noticed that people are a little hard up on cash. And that's for a variety of reasons. One is that the kids are either settled abroad and they're not in touch with the parents. So typically it becomes a kind of a problem for the elderly to ask the son or the daughter for money. And typically in Indian society, that's not done. So that's one. Second is the cost of living, which they are used to. When they retired at 58, you could live with a certain amount. And in India, we have a 5-6% inflation every year. So by the time you're 70, 72, that number is a gigantic number. Even if your lifestyle has not changed much, you are actually spending almost twice the amount of money to live the same lifestyle. Third and most important is that as you go through life at beyond 70, you start getting those niggling illnesses that you need to take care of. While you may have health insurance and you may have coverage on that, to a certain extent, some of these will cover only the hospitalization expenses. They don't cover your regular day to day medicines that you need to take. So these are some of the reasons why we have encountered, senior citizens, especially those in their 70s, who may need supplemental income. And that's really when something like a reverse mortgage plays a big role.
Right. So, so if we're talking about who qualifies for a reverse mortgage, so one is you have to be minimum 60 years old. So this is literally a, investment vehicle or supplementary income for senior citizens, right? What else? Is there like a minimum value of the house? What else? Should it be like, let's say, I mean, obviously it should be loan free. Whose name should it be on? Can it be a joint property? What are the things here?
So generally, it has to be free of encumbrance. It can't be on a loan and then you can't take, obviously. So it has to be free of any loan encumbrance of any sorts and so on and so forth. And usually the property is assessed, and about 60 to 80% of the property value is determined as the amount you're eligible for. And usually that amount is capped at about a crore rupees, right? So it can't be significantly above a crore rupees. And from that corpus, you are paid a monthly amount, right? So 50,000, 75,000, 1 lakh, depending on what it is. Now, there are also instances where people may not want it on a monthly or a quarterly basis. They may also want it as a lump sum. Let's say I have a medical emergency and for which I need to spend 10 lakhs of in the hospitalization, and that goes beyond my medical coverage. Then an already assessed property will be able to give you that lump sum as well. So those are the criteria by which you can draw the money on any of these bases. Like I mentioned, it is meant for coverage for the rest of your life. So let's say you drew the entire money in your lifetime, this thing, but property, obviously, they've only given you 60 or 80%, which means there is a residual value of the property that continues to grow. Either the land value has grown or somewhere the property is appreciated. So after the time of the individual, the property is assessed, and whatever is the differential amount is either paid back to the legal heir, or the legal heir has the right to come back and square off the loan and take the property over. Both scenarios exist, and it can be a joint property, in which case the reverse mortgage, both the partners or husband and wife, both of them will have to kind of sign the deed, and it's available to both of them.
What about ancestral property?
As long as the property is in your name, you are eligible to, and it is free of any encumbrance, you are eligible to take a reverse mortgage against it. And like I said, if it's an ancestral property and its value is very large, you're still cut off at 1 crore, right? So you can't take, let's say the property is worth 5 crores, you can't take 4 crores as a reverse mortgage. See, reverse mortgage is a kind of a benefit that the government and the financial institutions have given. So it is not meant to enrich you in your senior years. It is just meant to provide you a certain leverage of an additional cash flow against an illiquid asset like a property.
Right. No, it's great sustenance, honestly.
Yeah, absolutely.
Yeah.
Absolutely.
And what about, is this only for like a house, an apartment, or, a bungalow or something, or does it apply even to land? I'm guessing it doesn't.
I have not come across a situation of land, but It currently applies to house and property. I need to come back to you. I've not kind of
Okay. Hmm.
encountered it in the land part.
Yeah.
See, it's usually for people who are already living in that house also.
Right, right,
As
right.
a senior citizen, I'm living in my house, and usually if I have to sell it, I also have a problem because if I sell it, I have to go look for a rented house and so on and pay that rent. Here, I can live in the house and I can reverse mortgage the same house and continue to enjoy a cash flow from that. So that's the benefit. So that's
Absolutely,
all.
because a lot of people say, "Oh, you have a house," or you tell people, you're like, "Yeah, but I'm living there." So how does it matter if it's appreciating or depreciating? It doesn't do anything for me. But yeah, we were all wrong. Looks like
Yeah,
it does have
absolutely.
value.
Absolutely. You can generate a cash flow from the place where you're living without you having to move out. And the best part is that you will live your entire life in that place. And it's
Yeah,
only after your time that the repayment has to be done or the house will be sold and the proceeds kind of settled for.
yeah. Okay. So, can you give an example of somebody who you worked with, or hypothetical example of how it'll play out? A house of this much value or whatever. And
So
how many
let's say,
years, first of all? Because we're talking decades, we're talking about 100-year life. So let's say you're saying at 60, somebody retires, 5 years, 10 years, you kind of sustain yourself, and then cost of living and everything gets to you. So you still need to, what, if you're living a 100-year life, let's say 90, above 90, so it's still 20, 25 years. So how long can you sustain this?
so as of now, like I mentioned, 1 crore is the max ticket size that's allowed for a loan of this nature. And let's say you computed a 50,000 rupee per month. That works out to 6 lakhs per year. That works out to 60 lakhs in 10 years of cash flow that you kind of drawn out of it, and another 40 lakhs, which will translate to another 5 years. So as we speak today, the regulation allows for say 15, 16 years of a senior citizen's cash flow at standard rates. Now, like I said, the reverse mortgage is about 15 years in age, and this is evolving. I am guessing that, say, another 10 years down the line, the value of properties have gone up. So the government will also move that 1 crore to 2 crores. So it will allow for a lot more runway for senior citizens to draw money. But as we speak now, on a 1 crore property, somebody will have, say, 60 or 80 lakhs as the drawing that they can do. And if it is 60 lakhs, then that will take care of their 10 years of cash flow for them.
Okay. That sounds good. But tell me, what is the lowest value of property which can prove profitable? Let's say somebody has a flat that's the value is about say 50 lakhs. Can they still go in for this? Is there
They can.
hmm?
Theoretically, there is no minimum amount for this.
No
Like I
minimum
mentioned,
amount? Yeah.
there is no minimum amount. If the property is valued at 50, 60% of the property value, 30 lakhs, is the drawable amount that they have. Now, within that, whatever is the amount that they can draw. So, which means that they can't draw 50,000 on a 30 lakh. So that amount of what they can draw on a month-on-month basis also will be substantially lesser in a property where which is much smaller.
Yeah, but it's still something.
Absolutely,
Yeah,
absolutely,
yeah. And you're getting to live in the house, and for decades you're earning from it and it remains yours in your lifetime.
absolutely,
And if it's
absolutely.
a husband and wife or something, in both their lifetimes, right?
Exactly,
Yeah.
exactly. If it's a joint property, then both their lifespans can be continued in the household.
Yeah. So it all sounds great. So these are all the pros. Are there any cons to this?
There is cons. There is cons. Like I mentioned, typically the Indian parent looks at giving the property to their son or daughter after their time, right? And like you mentioned, in ancestors, it's flown through many generations in some cases. Now, so there is a mental block many people have against a system of this nature because after I have drawn the money, I will have to either my children will have to pay back the loan with the interest. So if I've used a loan of 60 lakhs, right, then my son is not just going to pay 60 lakhs, but he's got to pay the interest amount on that as well. Let's say that's another 40, 50 lakhs. So he's going to pay both of it to acquire the property. And that is not necessarily an emotionally pleasurable task for many senior citizens. So there is an emotional block that comes into, especially Indian parents when they do stuff like this, right? So there is an emotional issue around it. The second is that if they draw the money too quickly, then you still are staying in the house, but you already exhausted your drawings. Therefore, you don't have anything more. You're outliving your benefits of that house. So that's also a certain danger that you encounter. Not that you will be asked to leave the house, but essentially you have no more drawing that's available on that. So you'll have to still look at another source. So there are issues around these, and these are evolving issues. Like I said, as
Yeah.
more people experience this, I'm sure regulation will come to kind of provide for all this. But as we speak now, these are some of the issues that can come up for a senior citizen.
Yeah, it's a calculated move. You have to look at the pros and cons and how long you require that sustenance for, yeah, how much money you can get on your property, things like that. Yeah. So you have to think through everything, maybe consult somebody like you and then make a decision. Yeah.
Yeah, and also, one of the things we continue to believe is that, we are all victims of very, very strong mindsets that have been conditioned into our psyche over many, many years and decades, right? So the Indian parent or thing, even if the son is in the US and is very, very well to do by himself, etc., still believes it is his bounden duty to leave a property back for it, and which is, beats the logic, but it is so true. We come across so many people going through their share of, they would be better off with getting additional cash flow, but they believe that they don't want to do that because of, wanting their children to eventually, enjoy the property. And the children are actually doing very, very well. So
Yeah.
I don't think they're
I'm
ever
sure in
going to
some
come back.
cases the children are not even telling them to leave it for them, right? But the parents,
Yes.
just that emotional attachment.
In fact, in many cases, the children tell the parent, I don't want property, please. Don't leave it. Please enjoy your life, right? But parents are so conditioned that we come across many elderly who continue to kind of live within their means, so to say, and not want to enjoy this.
No, absolutely. This was going to be my question, that would you advise, people who come to you, is a mindset shift in order? We need to think differently because, to be very practical in your lifetime, you have a house and you're struggling for finances, whether it's medical bills, buying medicines, or whatever, just cost of living. You want a better quality of life. You want to be able to travel. You don't want to, I mean, count your rupees and do your calculations every time you step out of the house or you're ordering even takeout or something, right? So this is a practical thing, right? So to enjoy your life. But again, like you said, most people want to leave something behind for their children or whatever, next of kin. So do you think a mindset shift is in order, really?
It is happening, Anuradha. It is happening. So, two things I will tell you, and both of these are counter, and I may appear to be contradicting myself. Right? I am not for actively promoting reverse mortgage either. Right? My view is it's the last option for you. It's not the first option. So when you retire, I don't want people who are retiring at 60 saying next month onwards I want a reverse mortgage. No, that's not a good idea. Right? So start managing your money well, start being a little bit more careful about your money, and let's see how much you can stretch that money, how much longer you can stretch that money. That's really the idea, right? So that's the first option. Having said that, if you genuinely have a health reason or genuinely you encounter a dropping cash flow which you can make do with a property, we would most certainly advise you to take that option. That's certainly the option. Having said that, even if the current generation is not for it, what I'm seeing is people who are now in their 40s and 50s are warming up to the idea. At least mentally, they are a lot more less pressured, so to say. saying that, hey, worst case, I have a property that I can fall back on. That didn't exist in the generation that is now in their 70s, right? So there is one generation that will, in my mind, continue to endure pain before they kind of whatever take this decision. But the next generation, people in their 40s, 50s, are warming up to the idea because they also understand that the children are doing financially very well and their money is not going to be needed. In fact, in many cases, the children are doing so fantastically well. I've seen parents actually dispose of properties that they have built for them, saying that, I want to keep money liquid so that after my time it goes easily to my children rather than keep it as properties and so on and so forth. So we would actually see another variant to that as well. So
Yeah.
that is happening. So I
Yeah,
think one
that makes
generation
sense.
will.
Yeah, liquid cash always makes sense. Another question I know this is still evolving, but what if you have two properties and you put one up for reverse mortgage? Can you also put it on rent? Just wondering, can you earn, both ways?
So
Uh,
I think you should join the committee, the government committee on reverse
yeah.
mortgage. You have some very wild questions coming,
Yeah, a wild
but
card,
it's
this is,
allowed. Yeah,
yeah.
yeah. So it's allowed only for one property.
Yeah,
Like
but
I
this is
said,
Indian jugaad, right? You can't discount
yeah,
it. Huh.
yeah, you can't. But it does not make sense because the reverse mortgage is not free. It comes with a certain interest cost.
Yeah.
You are going to pay mortgage rates of 9 or a 9.5% as the interest rate. So your rental, whatever by whatever means you consider, your rental is not more than 2 or 3%. So net, it's going to be a losing game for you if you rented out a property and took a reverse mortgage on that. It's not going to it's
Work
not going
out.
to be a profitable. Yeah, it's not
Yeah.
going to be
Yeah.
profitable for you. That's what I see.
Yeah. But we must put this question. And maybe others, if people write in, maybe, we can have some more questions and take them
Why
up.
not? Why not?
Yeah, great. So, anything else you'd like to add? So basically, you've said that, maybe after 70, 75 is an ideal age to consider this.
Actually, ideal age is not to consider this at all because, like
Okay,
I
why
said,
is
this is
that? Like,
only a
you've
part.
repeated that, so I want to know why you said that.
See, I think and I'm going to go back to the start. I mean, I believe that one of the things that people have to do, and if there are listeners to your channel who are in their 40s and 50s, here is what I want to say is that retirement is one event that's going to happen to all of us, right? And it's an event that's kind of readily going to come. So it's better to plan for a life where you may need to exist on this planet for till the age of 100. And we are seeing that increasingly. We have never had this in the past, but increasingly we are seeing that lifespans are increasing, not necessarily because we are getting better, because of better healthcare, better systems, better whatever be it. So we are going to see an expanding life span. And one of the things we want people to do is take more proactive steps when you're much younger to put away a little bit of money, plan it better so that that money stretches you longer. Right? That's the first thing. Second is, I think there are people out there who are very emotional and spend a lot of money towards their children. And I'm not for a minute saying you shouldn't spend money. That's not my answer. But I do believe that you need to be cognizant of the fact that the same money has to power your children, the same money has to power your retirement as well. And you've got to weigh that together in some form of fashion. And you have to. So if you did this judiciously, and I'm not meaning it in a wrong way that you don't love your children XYZ, but it has to be judicious because I have seen instances where people have gone overboard even after the children are educated and they are independent. The parent continues to fund their expenses in some form or fashion, and after 20 years they expect the children to take care of them. Now that expectation doesn't happen, right? And then you end up in a mortgage kind of a situation where you have to do a reverse mortgage. And then there is an emotional trauma, and my son didn't look after me, I looked after him, quid pro quo, all that. The last thing which I want to say is that in my mind, whether you're 30 or whether you're 90, finance, having money in your hand, is a great form of self-respect that one can derive, and self-confidence, right? And I think it's everybody's right and duty to ensure that they keep money with themselves. Now, reverse mortgage is one way of generating it, but the argument is far beyond just retirement reverse mortgage. I think it is to do with how we kind of manage money in our mind and the way we do it. So I just wanted to say, because I've come across Anuradha, cases where people have given money, after retirement, out of my retirement proceeds of 2 crores, 50 lakhs I've given it so that my son can buy a property. He wants to buy a 1.5 crore villa, out of which 50 lakhs I've given. So I believe, to me, that's a very, very wrong way of doing. Love and affection apart. I mean, I'm not getting into that space. I think that 50 lakhs is meant to, kind of elongate your stay and, make you comfortable in the long run. And there is no right answer, wrong answer in this, but I'm only from a finance standpoint, I believe that people must kind of keep their money for themselves.
Yeah, absolutely well said. So basically, reverse mortgage is a good fallback option if one needs it. But I think in the long run, it's a good idea, to be pragmatic from the start, right? Protect your finances, protect your interest. Yeah. Thank you so much,
Absolutely.
Babu, and hope to have many more conversations like this, on retirement planning.
Thank you so much, Anuradha. I enjoyed it too. Absolutely.
Yeah,
Thank you.
same here.